What is going on, guys, and welcome back to another YouTube video. I'm glad to be back, and I apologize for my lack of consistency here on YouTube specifically. Lately, I have not uploaded in about a month or so. I've just been kind of busy. I guess when you make real money trading and when you actually make like 5K in a morning, it's a lot easier to say, oh, I'm going to go to the pool and have a mimosa, rather than, oh, I'm going to record a YouTube video. This stuff is quite time consuming, but I do enjoy and love making content and especially helping you guys out. So I am happy to say I will be back with the daily trade recaps here on YouTube. But let's get back into it today with a little bit of a different video. We will be recapping trades, but not a daily trade, except I will recap today's trade for you. But more so looking at the past 9 trades from about 2 weeks that I've taken, going on 3 because today's Monday. There was some trades that I left out, not only a few winners that I excluded, but of course I don't recap my losers, not because I have something to hide. I live stream every single day, and the link to that will be in the Discord below. Wednesdays are free, Monday through Friday is paid, so come check it out, come join us. But like I said, not like I have anything to hide. I just don't recap losers because there's nothing to gain from it. This is just part of my profitable model. There's probability of having losers. In fact, 2 out of 3 trades on average are going to be losing trades for me. But my losers are obviously very small compared to my winners when I have a 10 plus R weighted. So let's get back into it, or right into it rather, without further ado. All right, so starting off with this trade. So this trade was today's trade. You can see it on my chart on the left. The other trades I won't actually be charting because it's a lot. It's gonna be a long video if I'm, breaking down all of it on the chart. I'm just gonna show you based on the images that I took, but I know all the setups and what I took. So this one right here is based on a level. Not just a level. We have this sweep of liquidity at the low, London low. We also have an inversion right here. After the inversion, we have a clean break and retest to the level. I did market order this on this candle after it put in the wick here and came back up. But I could have waited, and after the inverse fair value gap, I could have waited for it to re-encroach to the level and take it there. Would have improved from a 9.3 to a 9.6 R, which you might think, oh, this guy sounds crazy. My steak's too buttery, my lobster's too juicy, type of dude. But no, I am always trying to optimize and improve. So I definitely could have done something better by taking this on the level here. But other than that, this is A+, not only of a setup, but of a trade. Great trade. And as always, I risk 50 ticks. If you're not familiar with the way I trade, I will link a video somewhere on screen, and you'll be able to go check that out, where I basically broke down my entire strategy for free for you guys here on YouTube. So I would definitely check that out if you have not already. But this is very much common of basically every single setup that I've not only taken, but especially recapped here on YouTube. You have the same common theme of the sweep of liquidity, the inversion, and then the break above and retest to a level, or break below and retest if it's a short. But mostly longing, especially right now. Anyways, let's go to the next trade. So this is a long from last night in Asia. We basically put in a low down here. Obviously, we made a new week opening gap. It was Sunday evening. Not only did I want to see that gap corrected, but I wanted to see us continue to all-time high, which is what we did. So the trade was based on a CISD, or a change in state of delivery. Essentially, when this candle right here closes above these candles but below the wicks, that is a change in state of delivery, or a CISD. This was based on the 5-minute CISD. However, if I did trade the level, which is typically my primary entry model, very clean taps off this level with a minimal drawdown. It technically would have been a more optimal setup as far as RR is concerned, or max drawdown, whatever. But in this case, obviously it played out. I did nearly get stopped here, but CISD worked. I wanted this early as soon as I could, because after that inversion down here, where I actually got stopped on a long right here on the inverse fair value gap, I got stopped out. I could have filled it on the fill of the inverse fair value gap, and that would have been my best trade and optimal trade entry. But this was like the second best I could get. But levels played very cleanly, and I was happy to see that. This level also top ticked and had a very good bearish distribution, and then it sent us all the way back down until 8 p.m. opened up like a flower. Very funny enough, I took a very similar setup. This was Thursday night. I did not trade on Friday because we were very much at the all-time high by the time I got on the charts, taking all relevant draws of liquidity. But we had this resting all-time high right here, and I was able to get in once again off a CISD. This one's off camera, but basically the exact same concept as last time. This one was on a 5 minute. I know that this was a 1 minute change in state of delivery. If you want, you could go check it out. It's the last Thursday. I don't know what date it was, but today's Monday the 11th. Anyways, you can see exactly at around 8 p.m. Exactly around 8 p.m. CISD happened. That's exactly what I took. Same 50 ticks weighted stop. And a common theme with both of these is I wanted to get in before 8 p.m. This one I got in obviously a little earlier, like an hour before. This one was just like 15 minutes before. Or, no, this is a 1 minute, like 3 minutes before. But I definitely wanted to position myself for Asia Open because as you can see, it hasn't even left a wick. It's just straight up. And I missed out on a lot of Asia trades before I kind of realized that's kind of the narrative we have right now. It was almost like a 70% chance that we just opened bullish. So I was like, okay, I need to just get in the long before. But of course, it wasn't like blindly that simple. I had my confluence of liquidity sweeps and inversions for both. And this one had the new week opening gap. I just decided not to TP the NWOG because I knew we were probably going to go higher for that. In hindsight, though, it was risky. I could have almost got stopped here, but the level played as a beautiful support. And if I didn't take it on the CISD, that level made a great setup as well, as you can see. But yeah, pretty simple stuff out of both of these trades. But yeah, that's the level. I actually didn't realize that I wasn't showing it on what you guys can see. But that's the level I meant. If you didn't take it down here, after 8 p.m. open, very clean break above and retest the level as well. So common theme between both of these setups, exact same thing, honestly. These were both CISDs below levels, but if I had waited and wanted to stick to only my levels, which is what I teach, beautiful setups on both. This is the next trade. This was based on the level. After this candle closed, I could kind of, like, this was, to be honest, very discretional, knowing that, you know, if we break above, we were just flying. So I knew we were not going to really come back for this level. So I market ordered off this close above. We did get the mitigation of this fair value gap here. We had absolutely dumped down, but quickly put in a small wick and then blasted up. I took the long right here, expecting us to not pull back. We did also form a small little imbalance there, but this was mainly based off of me expecting us to break through the level. When we close kind of on a level like this, it doesn't always push past it, but generally speaking, it does. And yeah, this was not my favorite setup because I feel like I should have waited for that break above and that retest that never came. I would have had no trade here. But I think I forced the position, and I'd give this maybe a B. That might be generous too. Feels a little gambly. But, you know, I have my discretion. I've been trading for 6 years, so I kind of know when to take a iffy setup. But I would encourage more like these other setups where, especially the first one, where you have that nice re-encroachment to the level. But obviously it played. This was a small little, 60-pointer or whatever that I took. But I was happy with it. This was also a New York trade. So 2 New York trades, 2 Asia trades so far. On to the next one. Another Asia trade. This one was a long based on an inverse fair value gap. So we had actually swept the lows before, and then we had came back up off of that sweep, and then we had basically made a baby IFEG in here. We mitigated this bearish one when we created this bullish one. Nice little inverse fair value gap. I should have, could have, would have played this differently, in my opinion. Also kind of like a B setup, maybe less. In this one, the inverse fair value gap's not bad. It's not the worst. It's definitely not like an A+ one at all. And I think what made this setup worse and more of a gamble, especially in hindsight, was after price came back and re-swept me basically once here and then retested me again. I kind of realized that this was not the best place to get in. I was a little bit early to the move. It obviously worked. My bias was correct. But, you want to not have it come lower than that swing low, because this at this point is just luck to me. The fact that I didn't get stopped before it ran is luck. So I definitely had the right idea. I'll give it a B, and I did have an inverse fair value gap there, but it just wasn't what it should have been. I also want to say that I did take this on the 30-second close above on the 30-second inverse fair value gap. This is a 1-minute chart though. But yeah, that was the next trade. Like I said, I'll give it a B, but easy long salt on high once again. So this trade was a little bit complicated. We had a literal, whatchamacallit here? Why can I not remember this? There was a breaker block. So there was an order block. It's kind of off camera, but we closed below it and on the first 1 minute candle, and that's when I kind of got into it because these were just wicks, and this closed slightly lower. But there was basically a breaker block or an order block, and it became a breaker block with this close below. Between Asia kind of having a bearish bias and the breaker block, I just shorted it with a 50 tick stop. I would call this, geez, I'm so hot right now. I'd call this like I'll give it also a B. I don't love this. I feel like it's not really how I trade. I normally like to, get in off a level or something like that. But obviously we did have a nice, dump here. But yeah, I would just say this is like a B. Once again, bias is correct. Draw of liquidity is giving me half the reason to take the trade. But breaker blocks are just not, and I feel like I almost got stopped here. So I'll give it a B. This was a great trade. Now, I really was waiting for it to re-encroach here, but I realized pretty quickly that we were not going to get that, and we were flying. So I got in just off this candle close where this candle opened, somewhere between there. But I basically bought based on us not coming back to the level. I put the stop loss there, and I was like, well, that's the same 50 tick stop I used. But my logic was kind of like, okay, on the 30 second, I missed it. We had already retested on the 30 second. And typically speaking, when these levels are going to run, they tap it and dip. And I saw that it was happening on 30 second, so I just forced a 1 minute close because I wasn't getting the retest. I took off 1 unit there at New York's internal high, and then the second one I left to run to London. I did end up getting the full TP, of course. This trade, very similar to the others. Instead of a CISD though, it was also a breaker. You can't really see off camera that once again. You can go look on your chart if you really want to, but we have this nice close below, and then we have a little bit of an inverse fair value gap going on as well, where we had a bullish gap here, bearish gap right here, mitigated it, created a bearish gap at the same time. So a little inverse fair value gap. 50 tick stop was up here. I had this little imbalance and this gap to both anchor my stop loss. And then I took one off at London low and one at daily low. This would be a B plus. This was a pre-market trade, so around 8 a.m. late London, pre-New York. But yeah, very clean trade to me. I mean, I would say B plus because it was pre-market. Otherwise, I'd give it like an A. There wasn't anything perfect about this, but we also had that inversion below the level here, and I wanted once again this this retracement, but it never came, so I just market ordered it right here. But not a bad trade. A lot of times you see these pull, like once it taps off the level like right here, it just leaves. It doesn't come back to it typically. So I mean right here it came back. If you look at this example on the left, it did come back. But in general, it's like a tap and leave type of thing. So I see it happen on the 30 second, and I'm like, okay, I'm out. I gotta get it on the 1 minute. This was just the same trade. This is actually the same trade. This picture is just the full TP, so you can see where I took one off at the low, and then another off at the daily low. But it's the same trade. Yeah. Anyways, hopefully this was helpful. Very simple stuff, guys. The best example here was today's trade, and that's what you should focus on. This is a very repeatable model. Even all the days that I took these other trades, I mean, look, you have a level trade right there. You have a level trade right there. You have a level trade right there. Of course, I took it. You have a level trade right there. I did not take it. You don't really have a level trade here, I'm not going to lie, unless there was something above that I don't see. But of course, there's not something that's always going to give you a setup. This 30 second played, but I didn't take it. 1 minute, I would have got stopped. That's, what? Is that? Hold on. It's about 248. It would have been tight, but I would not have gotten stopped by like 2 points. So could have played off this level as well, which is a nice fair value gap through the level. But obviously, I wouldn't really lawn it up here halfway to my DLL. As you guys know, I'm in at the bottom or the top, depending if I'm lawning or shorting. Oh, that's the same trade I was gonna say. But yeah, beautiful level play right there. Break below, clean tap off, dumps. So there was a level set up on basically every single one of these days. Even right here, there was a little short to be had. But obviously I got up here off the level as well. So about half levels and then half other confluences. Other confluences are great. The levels are my favorite though, and I kind of go out of my way to use the levels when I can. But let's say I'm bullish and we just had a bullish inversion off of like a sweep at the low. There's no reason for me to wait for a level and then wait for that break above and retrace into it when I could just get into the trade earlier. So I wouldn't rush your trades, and I would genuinely recommend focusing on this model and looking for trades off these levels. But when the stars align and you have like a clean inverse fair value gap, CISD, any of the other stuff I talked about here, breaker blocks, I take them. So if ever I have another setup and it happens to be more optimal than my levels would be, then I'll take it. But typically speaking, if you stick to these levels, you'll have really clean experience, especially as a beginner. I think that it's a lot easier to have something like a level to go off of rather than, your inverse fair value gap setup, but it's like, which one do you take? You don't have the discretion kind of necessary. I think that the levels are a lot easier to use with less discretion or less experience necessary. But yeah, hopefully this video was helpful for you guys. I know it was a little bit of a short one and I didn't go super in depth on trades, but I'm glad to say that I'll be back daily trade recapping here on YouTube, and I'll go super in depth on all of the individual trades, kind of like I did on this first one here. But I know we breezed through the rest of them there, but I'm back, so I will see you guys very shortly in the next trade recap. Hopefully this was helpful. Hopefully you enjoy. See ya.